I want to thank everybody for joining us here. Been a lot of excitement about the new final expense program that we rolled out about 7 to 10 days ago. I think on June the 17th we released this product for sale. As you well know, if some of you on the webinar are currently licensed with Equitable and have written our final expense plan called the Legacy Life Series, that product was withdrawn on June the 14th. But for the new life product, if you are already licensed with Equitable, you're good to go. You don't have to do anything different outside of ordering different supplies and getting used to the new product. So I've got Gershon Georges on the other end here of the webinar today. She will answer questions as we go through this. So if you have questions, you can type them in, send them out. And if you want a copy of the webinar, we do record these and you can get them down on the website. So if you have any questions, type them in. We'll read most of those back at the end of the webinar and try and get those answered at the end. So again, thank you for joining us, and let's go ahead and jump into this little presentation. The final expense program that we are now coming out with is called the Heritage Protector. It's a whole life plan, and as you can look at these rates, you can see that we have really got these very, very competitive for what's out there on the market today. A 50-year-old female non-smoker could get $10,000 worth of final expense for $24.58 if she qualifies for our level benefit plan. A 65-year-old female for the same face amount at $10,000 would run her $42.82 a month. So the rates are extremely competitive. We have done a few other things to make this attractive. As you well know, most of the Equitable products are available by way of telesales. We will talk a little bit about that here shortly. But the rates that you're looking at on the screen, we released these on June the 17th. Had a fantastic first week of business. Anytime you roll out a new product, you're always curious what the first week's going to look like. We wrote right at about $60,000, not quite, of annualized premium for this product. So that is just a great way to get started with this new offering. So for those of you, if you're on here and participated in writing that business, thank you, and hopefully that will continue as we move forward. Okay, I'll tell you a little bit about why we added the Heritage product line, what's in it for you, the agent. These are things we want to talk about as we go through here, why we want you to sell this product. We're going to offer you a few tips on how to sell final expense if you're new to the final expense market, and introduce some sales and marketing tools and ideas to you in the course of the next hour. So why we added the Heritage product line? Well, number one of the things that a lot of agents are very interested in are commissions. So what we did is we took a look at the Legacy series and compared it to the rest of the market, and what we found when we got to looking at the commission levels that we offered through the Legacy series, we found they just weren't that competitive with what was being offered in the market today. So if you have any questions about where your comp comes in on this product, you'll find that it's very good. You can check the Equiline website. Your commission levels are posted on there, or you can give your existing upline a call and visit with them about it. One of the other reasons that we know agents like selling final expense plans is there's very little servicing needed with a final expense plan. Number one, about the only service call you're ever going to have, unless they want to increase or something like that, is a death certificate. You know, that's what it's for. It's final expense. So you get a certified death certificate, and the service work is over. However, when we talk about service work, I started selling insurance back in 1984, and the way I built my practice to where it is today is by servicing those clients. What I have found, if you are a good service agent, you will have a very good, strong business. I always try to see my client when I first started at least twice a year. It's a great time to ask for referrals. It's a good time to find out if they're satisfied with your product or anything at all along those lines. So never ever think just because there's very little service with final expense that you should not continue to serve your client. They will definitely buy more business off of you. They will refer you to other people, things like that. So servicing is the key, even though there's very little service work in the final expense market. Another thing that we know for sure is this is a very fast growing market. The baby boomers have started retiring. It amazes me how I find out that 10,000 people per day in this country turns 65, and that continues for the next 17 to 19 years. 10,000 a day. That blows my mind every time I repeat that. That's just a phenomenal good time for us to be in the senior market. One of the key areas that a lot of agents like is this tends to be daytime work. Seniors a lot of times are home during the day. Now, with that said, and the baby boomers retiring, that may be changing. The baby boomers are on the move. They like to get out and do things, which is also a good thing for you and I when it comes to underwriting, because the more active a person is, more generally they are going to be in better health. So even though the most seniors are at home during the day, the baby boomers may be trying to change that phenomenon. So another good reason to be in this market. Another thing that we like and why we want you to sell it is this is a very quick issue program. It's a very quick pay. We get our commissions paid rapidly. We have a very simple application process that does not require any medical exams. Just a few medical questions is all it's required to answer. Of course, to get that policy issued, the questions have to be answered truthfully. So very simple application process. We also have our new Express app process that this policy qualifies for. You can actually get this policy issued over the telephone, so you don't have to worry about sending any paper in at all. You can actually call our underwriting hotline, and we'll cover more about that here shortly when I get to the Express app portion of this. Our goal is to get these policies turned around on clean applications in 4 days or under. So, one of the big things with buyer's remorse when we sell insurance is a delay in getting a policy issued. So our goal, just so everybody's aware, is a 4-day turnaround on clean applications. So as agents, we need to do our job and make sure that if we're not doing an Express app, that when we do a paper app, everything is complete on the application. Competitive commissions, we get those paid out daily once the policy is issued and there's no outstanding requirements. So if we do our job correctly in the sales field, we will get our business issued very rapidly. Another huge, great feature in this product that I feel is the way we classify smokers and non-smokers. A non-smoker will simply be defined as a person who has not smoked cigarettes for at least 12 months prior to the application and completion date. So let me clarify that, because I know it's going to get asked. We had a webinar the other day, and the guy sent a question in, well, what about electronic cigarettes? Electronic cigarettes have nicotine in them. Electronic cigarettes would be considered a smoker. So if they have an electronic cigarette, you're going to have to qualify that as a smoker. Now, another thing I had come in the other day, and they said, well, my client only smokes cigarettes when they go out and have a couple of beers. They might have a cigarette or two. Well, the question says, have you smoked cigarettes in the last 12 months? Well, if you had a beer last week and 2 cigarettes to go with that beer, he's a smoker. So if they're smoking cigarettes at any time, that is classified as a smoker. Now, here's the unique feature. You can take somebody who's chewing tobacco, who smokes a pipe, or who smokes cigars, and they can qualify as non-smokers. So I'm going to give a couple examples here a little bit later about how that can be beneficial to us as salespeople. Guaranteed coverage. We do actually have a true guarantee issue product with this new Heritage Protector series. It's guaranteed coverage. It's available to every client regardless of their health. Now, the only thing that would determine that is, on the guarantee issue, we have age limits. If they're 85, 95 years old, they're not going to qualify age-wise. But health-wise, if they're in the age limits that we go for our GI product, regardless of what they're doctoring for, they will qualify for that guarantee issue product. Rates never increase. This is a guaranteed level premium throughout the life of the product. Also, with that said, that means benefits will not decrease either. So good benefits. Now, this is a good thing. I've had agents out there try to get me to sell fraternals, and we used to sell fraternals through our captive agency back in the day, and we had a company out of Illinois, not going to mention any names, but they were always saying they'd never missed a a marker for their interest rate or anything at all, and they've been in business since 1890. The economy went south, so did their benefits. I had guys out there that had written $10,000 worth of final expense coverage pass away and get a check for $9,600. That takes a little bit of explaining. So anyway, that can't happen with this type of product. Rates never increase, benefits never decrease. The only way we could ever cancel a plan would be for non-payment of premium. So that's a good feature. You know, it's a guaranteed renewable product. We will, when we get to the app, I'll show you a couple other things that apply to these areas. What we have is we have two products to fit different health profiles. We have our Heritage Protector Preferred. In other words, that is full death benefit from the very first day that they are approved. The Heritage Protector Standard, that will be for people who smoke cigarettes. And then there's another section on the application we'll cover shortly that could also throw them into the standard category. Then we also have the Heritage Protector Graded. It's a 3-year graded death benefit. The way that works is in the first year, they get all premiums paid plus 5% interest. In year 2, they get all premiums paid plus 10% interest. And in year 3, it equals 75% of the face amount. In other words, if they bought a $10,000 face amount plan, they would get $7,500 in the 3rd year. And in the 4th year, then it is 100% death benefits payable. The face amounts. The minimum face amount is $2,000. The maximum face amount is for the Heritage Protector, and the Preferred and Standard is $30,000. On our graded policy, the maximum benefit level is $10,000 on that high of a risk class, and for the things that we're taking, which is a true guarantee issue plan, we cap that at $10,000. For the issue ages, we go by their last birthday. So if you were in front of a client today, you would use their date today. We always go with an application date on age. Even though if they were going to be another year older tomorrow, you would still use the age that they are today. On the Heritage Protector Preferred for our non-smoker category, the age limits are age 50. In other words, you can start at age 50 and you can go as high as 85. For the Heritage Protector Standard for both non-smoker and smoker, we go from 50 to 80. And the reason that says non-smoker and smoker, 50 to 80, is because there are health questions that you will see shortly in the second part of our application. They could be a non-smoker but answer yes to some of these very severe health questions and still qualify for our standard plan. Okay, then on the graded plan, we go from age 50 to age 75, so we got a 25-year window there that we will issue that business. Another good benefit is you can request effective dates up to 60 days beyond the application date, and the owner's state of residence determines the application forms and premium in which you use. An application will not be accepted if the agent is not licensed in the owner's state of residence. So let me stop there and explain what that means, because we get this question all the time. We'll have an agent call up and he'll say, hey, I'm licensed in Missouri and I've got some relatives coming down from Iowa. Well, they're here in Missouri. Can I go ahead and write them on a Missouri application? No, you cannot do that. What you can do is get appointed and licensed in Iowa, and when they come down here, you can write them on an Iowa application. But just make sure that you're licensed in that state that they are from, and use the forms from the state in which they are from, and you will have no problems. Okay, moving on to the application. Very, very simple application process. In part 1 is our personal information, basically where we ask name, date of birth, city, the Social Security number, male, female, born in this U.S. citizen or not, and then a couple of different phone numbers and whether they're married or not. You move on to the second application, or second part 2 of the application, and you only fill this out if the owner is not the applicant. So in other words, maybe you're sitting there with grandma and she's got a 15-year-old grandchild that she wants to take this plan out on. Well, first off, that wouldn't work because you've got to be between 50 and 80. So say that you're in a situation where you got a a parent that wants to write it on their son who's 55 years old. They could do that, but the parent would fill out the owner section because they're going to be the payer. Any questions on that, send your questions in and we will answer them at the end of the webinar. The beneficiary section is very, very simple. We got 5 areas there for a primary. Should you have a man or a woman that have 3 children and they want to make them all primary and they want to designate 33 1/3 to each one of those children, you just check the primary boxes on the left-hand side. Or you may hit a situation to where you only have 1 child and they've got 2 children, so you check the child as primary and the 2 kids as contingent if that's what they wish. You fill out their name, as much of that information as you can possibly get, their name and address, their social security number, their email, their date of birth, what is the relationship to the insured, and what percentage do you want to designate to each one. So pretty simple part. If you guys have done final expense in the past, you're familiar with everything I'm showing you here on the application. When you move down to the Part 4, policy information, what benefit level are they qualifying for? Are they qualifying for the level benefit or the increasing graded benefit? Fill out the face amount. And on the automatic policy loan, I would always check yes. Basically, that's a feature that should your client go down the road 4 or 5 years and there's some cash value build up, maybe they have some financial difficulties and it's going to affect them for 2 or 3 months, the automatic policy loan can keep the policy in force and not have it lapse during that length of time. So that's a good little feature for each individual. Okay, going to move right along to the health application. Now what I want to do is I'm going to show you the first 9 questions here, and then I'm going to move on to the second part. Couldn't get it all on one screen, but there's what the rest of the app looked like. You got question 10, 11, 12 in the first section, then you got part 2. So let me go back to the first section here. At the very upper left-hand corner, if you check that box, it says, by checking this box, the insurer elects a guaranteed issue product. Maybe you're sitting there talking to someone who has Alzheimer's disease. You're talking to one of their family members, and they want to take a life plan out on their spouse or the person who has Alzheimer's disease. They don't want to answer any health questions, so they just check that box. Or maybe you're sitting there talking to somebody whose height and weight is way outside the guidelines. Maybe they're 5'10", 450 pounds, which is outside the guidelines by about 100 pounds. You just check that box, you're done, it's a guaranteed issue. You don't have to ask whether they've smoked. You don't have to ask their height and weight or any of the health questions in Part 1 or Part 2. So that's an option. That is a true guarantee issue plan. Basically all you need is their name, address, date of birth, Social Security number, and where do you want the money paid to on the death of the individual that's insured. But anyway, look at these health questions in Part 1. Some very, very serious health questions. It says, are you currently hospitalized, bedridden, or confined to a nursing home, receiving hospice or home health care? If that answer is yes, they automatically are going to qualify for the graded benefit, which is the guarantee issue plan. So there's some, these are very, very serious health questions. Have they used oxygen to assist in breathing? Are they confined to a wheelchair or paralyzed? In the last 12 months, have they been treated for AIDS? In the last 12 months, have they taken any medication for bypass, angioplasty? In other words, maybe they just had quadruple bypass 2 months ago. They could still qualify for the guarantee issue product because it is a true guarantee issue product. But I want to move on to one of the questions that really caught my eye, and I know is going to be asked all the time through this process. Is question 11C. Question 11 states, in the past 2 years, have you been prescribed medication by a member of the medical profession for diabetes in combination with a history of stroke, TIA, heart disease, or disorder? B, kidney disease or eye problems. But what caught my attention on this was number C. And I know agents are going to ask about this. So I've got a diabetic that I'm talking to, and that diabetic is taking medication for blood pressure. Question C says, any circulatory disease that affects the heart or blood vessels. So immediately I'm thinking, well, are they talking about a diabetic that's taking blood pressure medicine? So I sent that question off to the underwriting department, and I got a feedback from Jose, and it said, question 11C does not does not refer to high blood pressure. We're looking for atherosclerotic diseases such as coronary artery disease, which is blockage in the heart vessels, peripheral vascular disease, which is blockage in the vessels of your arms and legs, or carotid artery disease, which is blockage in the neck. Very, very responsible a lot of times for people who have strokes. They got carotid artery disease blockage. These are the most common conditions that they're looking for under this question. So if you have a diabetic that doesn't have a whole bunch of complications, doesn't have any neuropathy or things like that, and you come down to 11C, if they tell you, yes, I'm taking blood pressure medicine, they can still answer that question, no. So very important that we all understand that that is the way they look at the blood pressure section on that question. Okay, talk a little bit about our Express app process. I don't have a lot of time here because of time constraints to go into the incomplete process, but the Express app process is something Equitable, I think, is very, very good at. The technology behind developing the Express app process has been several years in the making. We've been doing the Express app process for several of our products, our MedSup, the short-term care plan, and our Legacy Life was all done, had the option of doing the Express app process. So let's talk a little bit about how that works. To submit an application by using the Express app process, we're going to use the medical questions from the application to pre-qualify that applicant. If the applicant does not qualify for our level benefit but does qualify for the graded benefit, be darn sure that you let that prospect know what the premium is, because you don't want to waste anybody's time, your time, the client's time, the underwriting department's time. If you know they're not going to qualify for the level and they're going to get it graded, and the level's $42 a month and the graded $70 or $80 a month, and you know they won't take that up front, there's no reason to call. So make sure you do some good underwriting there and make the client aware of what that premium will be. We want to have the applicant read the notice of the information practices and privacy policy. The privacy policy has to be read to the applicant, or the agent must read it to the applicant. In other words, they can read it, you can put it in front of them, let them read it, or you can read it to them prior to calling to start the Express application. I assure you we're going to ask that question, have you read our privacy information privacy practices to the client, or have they read that? If they say no, then that will stop the interview right then and there. So make sure that, I'll show you what we're really looking for to make sure that they read one certain section here. Make sure you give them the life insurance buyer's guide, but right here's what we're really looking for on that privacy policy. It's the MIB, the Medical Information Bureau. This is a section that you want to make sure that they understand, that we will have a request by the MIB to arrange disclosure of the information in their medical files. That's how we're going to underwrite with the Medical Information Bureau, and the Milliman script check is how we're going to underwrite the majority of these policies. If you have written the Legacy Life policy in the past, you're aware of the fact that everybody had a PHI, so I'll cover that here shortly. The PHI stands for Personal History Interview, and we're trying to get away from that as much as possible. So the telephone interviewer is going to start by asking you, the agent, the following information. They're going to ask you, Bill, is this an Express or a regular application? My correct answer should be Express. They're going to want to know what telephone number I'm calling from. Should I get cut off during the interview, they can call back. They're going to want my name and my agent number. They're going to want to know if there is a splitting agent involved. Guys, gals, this is important that you understand this about splitting agents. A splitting agent, they're going to want to know that splitting agent's name and agent number and the percentages. Remember, the percentages can be split in any combination from 1 to 99, but the percentage must be in whole numbers. It's got to be 2% for me, or 2% for the splitting agent, 98% for me. It can't be 2.5 or 3.5 or so on. It's got to be even whole numbers. So here's the problem that we have had in the past, and we're trying to eliminate it. If you're going to have a splitting agent, you got to disclose that at the time that you're doing the Express app or on the application if you mail it in or fax it in. That has to be on there right then and there. And if it's not, we're not going to make arrangements to go back and correct it 2 or 3 weeks later. Both agents have to be appointed and licensed in that state that the application was written in. So if you're splitting it with an agent, you're from Missouri, and you're splitting it with an agent in Texas, and you're writing a policy in Missouri, the agent that you're splitting it with in Texas also has to be licensed in Missouri. So make sure you cover all those bases. The problem being, when you call 2 or 3 weeks later and say, oh, by the way, I want to split that with Johnny Ho Handle, then we have to go back and reverse all the commissions that we paid out, reissue yours, pay him, and that's an accounting nightmare, and it takes a lot of time for the accounting department, so it costs us a company time and money. So just remember, if you're going to split, it has to be disclosed at the time of the application, and then there won't be any problems. Then we're going to ask you the client's first and middle last name. We are going to ask product information, the face amount, what plan you're applying for, is at the level or graded. Will the automatic premium loan be included? Again, as I said earlier, if it were me, I would always say yes on that, so that should the client run into issues down the road, they should be able to keep policy in force for a while. Okay, some states have strange requirements. So what you have in front of you on that slide is states where the replacement notice must be submitted when the applicant has existing life insurance and or annuities regardless of any replacement. If you're in one of these states listed right below that heading, you have to fill out the replacement form in all circumstances, even if you're not replacing. I don't make the rules, but we do have to follow them. If you're in states where the replacement notice must be submitted only when replacement is intended, that would be in the states listed below. I live in Missouri, so if I'm replacing a life insurance plan, I have to submit a replacement notice. If I'm not submitting, or if I'm not replacing anything, I don't have to if I live in one of the bottom sections where the states are listed. So if you need this slide so that you have it, if you're selling over the phone in multiple states, if you need a copy of this slide, let us know at the end of the webinar. We can email this slide to you. We can actually email the whole presentation to you as far as that goes. Height and weight guidelines. I do believe that if you look at these height and weight guidelines, that you will see we're very, very flexible. You could have a 5'10" man or a woman. These are unisex charts, so they could weigh as little as 115 and as high as 310. So that will let you know whether we accept or reject. Now, say you've got a 5'10", 450-pound male. Well, he's a little bit too short for those guidelines, so we would not issue him a level or standard plan, but that would let him fall into the guarantee issue plan. So, you know, make sure you're aware of the height and weight guideline. These guidelines can be found in our underwriting guide, and you know, so make sure you're familiar with that. We do have a height and weight guideline chart. Now, before I move too much further on, I want you to know that the people on the webinar that have sold our Legacy Life product in the past, unlike the Legacy Life, this Heritage Protector series does not require a personal history interview for all regular applications. The underwriting department will attempt to underwrite all paper applications without a PHI. Once that application comes into the home office, we will call that applicant only if there are discrepancies in the information that we get back from the MIB or the RX check. Since the personal history is not mandatory for all regular applications, in other words, non-express applications, you don't have to call to find out whether they're going to do the PHI like we required in the past. So, as an example, if I had a perfect health person that was taking no medication, my personal preference here, instead of calling and doing a PHI and wasting my time, the client's time, and the underwriting's time on an app that you know is clean, I just submit it paper. We will run the MIB check, the RX check, and issue that plan. There's no sense of you wasting your time doing a PHI and taking another 25 minutes to do that. So, personal opinion, you guys can handle that however you choose, but that's how I would do it. The Heritage Protector Preferred, to give you an idea of where they're going to come in, whether it's going to be preferred, standard, or graded. By the way, when we printed all the applications, we did not put the set of guidelines that I'm showing you here. When I get done with this page will be full. This will be attached to all future applications. We're reprinting a bunch of applications and putting this right on the front of the health portion, so that if you have a question in the field, you can refer right back to this and you'll know what category your client falls within. So the Heritage Protector Preferred, if all questions in parts 1 and 2 are answered no, and the height and weight are within the regular guidelines, the medical records come back clear, they're going to get the preferred plan. The standard, the Heritage Protector Standard, if all questions in part 1 are answered no, or if you have one or more health questions in part 2 answered yes, or they're a smoker, they can go ahead and get the standard benefit. Now, if you remember when we looked at the health questions on that application, they can have some pretty serious health questions answered yes in Section 2 and still qualify for our standard benefit plan. And to me, that's pretty important, because, like I said, the questions in Section 2 are pretty serious health conditions. I'm trying to find that slide real quick here. Let me just pull that up here and I'll read them back to you. Question 2, you could have somebody, they could answer all 4 of these questions yes and still get a standard plan. So in the past 2 years, have you been diagnosed or been told or taken medication for Parkinson's disease, cirrhosis of the liver, or liver disease or liver disorder? They could still get our standard plan, not the guarantee issue plan. In the past 3 years, have you taken medication for diabetes, including amputation, eye or kidney problems, insulin shock, or diabetic coma? Stop and think about that. That's pretty serious stuff. And you're getting not our level plan, but our second best rated plan price-wise, our standard plan. So they could have one or more questions in Section 2 answered yes, or they can be a smoker. Now, if they're a smoker and answer those questions yes in Section 2, then they're going to the graded benefit plan. So all of this will be on front of the app. You guys will have this at your disposal so you can refer to it while you're in the field. Their height and weight would have to be within the guidelines, and again, the medical records would be clear and no discrepancies with that as you go through it. Okay, for the graded plan, simply put, if they don't have to answer any of the health questions and just get the graded benefit, or if they answer any question in Part 1, yes, or if the applicant does not qualify for the preferred or the standard and checks boxes on Section 4 of the application agreeing they are willing to accept the Heritage guarantee issue. So that's your 3 different guidelines for pricing the product out. Who are your ideal prospects? As far as I would say, people who are wanting somewhere between $2,000 and $30,000 worth of life insurance coverage, someone who wants to help pay their final expense plans or medical bills, remaining debts. A lot of people today buy Medicare Advantage plans. A lot of these plans now have anywhere from $5,000 to $7,000 of out-of-pocket medical expenses. So maybe they got real sick, passed away, and by the time everything was said and done, they owed $4,000 or $5,000 in medical bills. That would be someone who would be an ideal prospect if they carry a Medicare Advantage plan. Maybe they want to supplement their current insurance coverage. Say they bought $2,000 or $3,000 worth of final expense 7 or 8 years ago, had someone pass away close to them and found out the bill was $10,000 or $12,000, and they decide, hey, I think I probably need some more. I better buy some additional insurance. Or a situation to where someone that you're out there in the sales field and you call on someone and maybe they just recently bought a final expense plan, and in your discovery you found out that they smoke a pipe or chew tobacco, but that company rated that person into their smoker category. There's a darn good chance, if their health's pretty good and they chew tobacco or something like that, we could get them into our preferred rate because of our way of determining a smoker rate. And remember, anybody that's using smokeless tobacco, such as chewing tobacco or smoking a pipe or cigar, will still qualify for our non-smoker rates. So that might be a great opportunity for you to put more insurance in a home and give them a better bang for their buck. People who are 50 to 85 who currently maybe own no life insurance, again, maybe they bought insurance several months ago or years ago, and maybe something's changed in their situation, that they have went through some of their savings and they need to make sure that there's enough money there to go ahead and get the final expenses in order. And again, of course, the person who is a smokeless tobacco user or cigar pipe smoker. One of the things that I always did when I was out in the sales field, I don't get out there very often, however I did get out yesterday, but one of the things that I always did when I was selling final expense, one of my leading questions to find out whether I had a prospect or not was I would sit down with a man or a woman and just simply ask this question. I would say, you know, Mr. and Miss Jones, if one of you died tomorrow, would your loved ones be able to pay your final expenses without putting any additional hardship on them? Guys, when people pass away, like these seniors that we talk to that have been married 40, 50, 60 years, when somebody dies, that's a very, very emotional time from them. If we can take away the burden of them having to worry about the cost of a funeral, you're doing a tremendous benefit for your client. I would always ask them, do you know what the average cost of a funeral in your area is? It could be anywhere from $12,000 to $15,000. What I used to do, I used to live in Marshall, Missouri, and the Campbell Lewis Funeral Home probably done 85 to 90% of all the funerals in that area. And I always had a good in with Jimmy Lewis because I've got his mother-in-law and father-in-law insured, and so good connection there. So when I would have a client that would use their funeral home there in Marshall, I would go to my client and ask them, you know, once the emotions have settled and a couple of weeks had passed, I'd sit down with them and I'll say, listen, do you have a copy of your funeral home bill? And depending on how well I knew them or not, I would ask them, could I have a copy of that? And tell them why I want it. I said, listen, people have no idea what it costs for a funeral. They think, you know, $5,000, $6,000. You just had an average funeral for your loved one and it cost $15,000 or $12,000 or whatever it was. I said, what I would like to do with this is I'd like to put it under plastic. I'll black out your name so they don't know who I'm talking about and the address. I said, but I can show them the date and what the cost of that funeral was, and I would keep that under plastic. That is so persuasive when somebody that you're talking to in that surrounding area or maybe in that town, they can open that up and look at it and say, holy mackerel, I didn't realize those costs add up like they do. So get a copy of a person you have insured. Once you know that they have passed, go to the family and tell them why you want to do it. You'll be surprised at how willing they are to help you. So if you're new and you don't have that opportunity or ability, go to your local funeral home and just say, listen, hey, Bill Ellsworth, I'm writing a lot of final expense plans in the area. Could you give me a breakdown, something I can copy and put in my ledger so that I can show people what it actually costs for a funeral? Well, the funeral home's going to be glad to do that for you for the simple reason if a person comes in there and they've got a final expense plan and it's worth $15,000, that funeral home is going to know that he's going to not have to worry about losing money on this funeral, that he's going to get paid. So very important. The funeral homes will work with you. They'll give you a list of what they charge, and I know that's a very, very stress-relieving situation when people have their final expenses in order and have a way to pay for it. Some of the things that you can use final expense proceeds for, you can help beneficiaries pay for the funeral home expenses and associated costs, unexpected medical bills incurred during a final illness. Very important when you're pricing out how much benefit that the client needs to buy for the burial arrangements, or the cost for the professional funeral service charges. Maybe somebody dies while they were on vacation in Florida and they live in Kansas City. There's going to be a transfer of the deceased from Florida to the funeral home. Trust me, that adds up rapidly. Caskets. When my father passed away about 11 years ago, we went in and started pricing caskets. They can range anywhere from $1,000 to $15,000 to $20,000, just depending on how elaborate you want to get. So these are things that funeral homes can provide you, the cost of their casket services. You can show that to them while you're there. The grave plot, it costs money to open the grave. It costs money to close the grave. The viewing facilities. One of the most expensive things also will be the headstone. If you want a nice headstone, most people want to get one engraved. You can easily spend a couple $1,000s on a headstone getting the engraving done and getting it placed. I had a guy in Marshall, Missouri that had I think it was a $12,000 plan on his wife, and when she passed away, the funeral was about $9,000. He still had a check for $12,000, and he called me up. He was very emotional. They'd had a child die earlier in life. This has been about 3 years ago, and he said they were now able, with the additional final expense money, that they were now going to be able to get a headstone for their deceased child. And I tell you what, that's pretty emotional when you're out there and the client calls you and he's thanking you, and he's, you know, you can tell he's almost in tears on the telephone. But just, you'd be amazed at how thankful people will get when they have a good final expense program in place. So guys, just remember, a final expense is a very simple sales process. It's a very emotional process. I consider it a one-call close if you keep the presentation simple. What I try to get guys to do, if they want to get in the final expense market, is commit to a direct response card program. If you will commit to getting 5,000 cards per month, I always use, this is the guidelines I always use, 50 to 75, and I would stay anywhere from 15 to 50,000 in annual income. So what I determined was, for every 20 cards that I got back, that would generate anywhere from 2,000 to 5,000 in premium, depending on the age, the face amount, and the premium for those plans. So it's going to be up and down. So what I did is I broke it down a little bit further, and I figure if you're going to do 5,000 cards, you don't want to do those the first of the month. You want to do 2,500, and then 2 weeks later turn around and do another 2,500. That way you space them out, you don't get them all at once. So a 25 card mailing is going to run you around $390 per thousand. So to get 2,500 out there, you're going to spend about $970 for a $2,500 mailing. So if I keep it in the middle of the road and say, instead of getting 5,000 or getting 2,000, go right in the middle of that, I'm about $37.5. So for every 20 cards back, I'm going to make about $3,700. You can easily see how you can make more than $5,000 a month in new first-year income. So if you want to get in the final expense market, make yourself be dedicated to doing at least a $5,000 card response per month. I think you'll find if you do that, you will be looking at a lot of income by the end of the year. Okay. Here is the states that the Heritage Protector has been filed and approved in. If you're looking at a green state, that is an approved state. You can go ahead and market that product there. If you are in a yellow state, that means it's pending. I think there's only one left, and that's Delaware. We're still looking at Arkansas and Montana to get them approved. We also have a product filed in Florida. That's on our sister company at Heartland National Life. So very soon we will have this offering in Florida. A couple of other states that we may bring on later would be Minnesota, maybe from not New York, probably Connecticut, something like that. But anyway, we just about have the entire country covered. If you are in Florida listening today and you want to get contracted with Heartland National, that product should be available within the next 30 days. So hopefully we can get Florida, get us approved there. Okay, that's basically all I've got here. Kevin Williams is our National Sales Director. There is his email address. Ginger Abbott, she's also with the home office in Salt Lake City. Her email is ginger.abbott@equilife.com. She can help you get a sales kit. You can dial the 800 number, 877-579-3751. Or you can get a hold of myself or Cindy Laster at 800-352-5121, and you can get a hold of me at bill.ellsworth@equilife.com, and Cindy can help you with licensing and her email address is right there, cindy.laster@equilife.com. So with that said, I'm going to be quiet. I'm going to get Rashawn on the phone here. We're going to try to get your questions answered. About halfway through this, I'll back this up so that if you didn't get Kevin or Ginger's email address and phone number, it'll be available to you. So, Rashawn, are you there?
Yes, I am. On the one of the first questions I have, Bill, is in regards to whether or not we would ever take the, do we have plans in the future to take the replacement form as a voice signature?
As a matter of fact, that's a great question. Right now, we have a group of people in our boardroom. Linda Janitis is one of well, she's not one of, she is the head underwriter, and that was a discussion in there that we are still working on that. It's not easy to do, but we are definitely trying to get that done. So we don't have it done yet, but we are working on it.
Okay. The next question I have is, are the rates the same for guaranteed issue as final expense? I'm
not sure I understand that question. Read that again.
They wanted to know if the rates are the same for guaranteed issue as it is for the final expense product.
For the level benefit final expense, no. The guarantee issue is a higher rate. It's a higher risk, so it's a higher rate.
Okay. The next question I have is, why does our final expense policy start at the age of 50?
Well, that's a good question also. That's just the way it was actuarially priced out. That's as good as answer as I got for you. I really don't have an answer for that. That's just the way it was written.
Okay.
And actuarially priced.
Okay. The next question I have is, if they elected to check the box, is it a true guaranteed issue, and is there any no knockout questions of any kind?
No. If they check that box, story's over. You don't need to go any further. You don't need to ask any health questions. If they check that box right there at the beginning of the application process, you don't have to get their height and weight. You don't have to ask if they're a smoker, and you don't have to ask any of the health questions. It's done. Guarantee issue. Just make sure they will accept the price, because guarantee issue, again, is higher than our level or standard benefit structure.
Okay. And I have a agent that would like to know if the buyer's guide is in PDF form.
I don't think it is, but that's a great question, and maybe something that we can discuss about doing. That wouldn't be a hard fix to get that on the website. I think make a note of that, Rashawn. That Scott's right in there also,
okay,
and Linda's in there. Let's once they get done with that, let's see if we can't get that up. I think that's an easy fix. If it's not, we can get it there.
Okay.
Thanks for that question, whoever answered it.
The next question I have is the mandatory replacement form based on state by state, or do you have to? He said, or do you have to have the replacement form every time?
It depends on those states. Let me buzz back through there, see if I can find out where that is, and I'll just leave it on the screen for a while. But we can email that to them also.
Okay.
If you want, if that right there it is. Okay, let me just cover that again. The replacement notice. States where the replacement notice must be submitted when the applicant has existing life insurance or annuities, even if you're not replacing it. If you live in Alabama, Arizona, and all those states there, whether you're replacing that business or not, you still have to fill out the replacement notice. States where the replacement notice must be submitted only when the replacement is intended are the states listed below. So if you live in Nebraska and you're sitting there with somebody who has existing insurance but they're going to keep it, you still have to fill out the replacement notice. Now, guys, gals, that makes no sense to me, but you're talking about bureaucrats, so we have to apply by the rules, and they make them. We have to follow them.
Okay. The last question I have is there a limit to the amount of yes answers in Section 2?
Yes, there's 4. Oh, seriously. No, they could answer all 4 questions yes in Section 2 and still get the standard benefit. And as I was saying, that's why I went back and read those questions. Those are some pretty serious health conditions to get a standard benefit and not a guarantee issue.
Okay, that was actually the last question that I had.
Okay, guys, appreciate you joining us. Gals, if you're out there too, appreciate you also. At Equitable, one of the things that we have done through the years is we've always listened to what agents want and think are important. I had a situation just the other day to where an agent was kind of complaining about the first part of our webinar to where I was talking about Social Security number. And if the Social Security was not there, then that was going to pin the application and slow down commission. So he was pretty upset about that and said he didn't really think that that was fair. So we sat down with the actuarial or the underwriting department and said, listen, do we have to have that? And we all come to a conclusion, no, that should not keep the agent from getting paid. So you didn't hear me talk about that during the webinar today. So guys, if there's ever anything that you think that we can do to improve, by all means, let us know. We're here to make your life easier. I am an insurance agent myself, so I take these things very seriously. If I can help you, I'd be happy to do it. If within my power, I'll sure try and work with you. And with that said, I'm going to let you get on with your day. I appreciate your time. Have a great day, and we will talk with you soon. Thanks.